All right. Hello, everyone. Welcome to, I think, the last edition of This Week in Crypto for 2021. Merry Christmas to everyone celebrating and watching this later on. Happy holidays. It's just going to be me and Max today. Obviously, Brian is celebrating Christmas. Here in my country, we've got Christmas 2 weeks from now. So I'm still not in the festive spirits, but we've got a lot of charts to go over today. So if anybody is bored at their family's home and just wants to talk about some markets, let's do that over the next maybe 45 minutes. So I don't know how long this call is going to take. Maybe it will be a bit shorter than usual. We'll see how much chat is active today. If people actually want us to look into some coins or they're just too drunk on eggnog, I don't know. We'll see what happens. But it's Christmas, but the market doesn't stop. Bitcoin is back above 50K for probably the last time this year. I mean, it's the last rally for the year, unless we have some extremely eventful last 5 days. So we're going to talk about a bunch of different on-chain and off-chain indicators for Bitcoin over the last couple of days. Because back on Tuesday, I wrote a weekly report where it was kind of a mixed bag. Right? If you go to Insights and you check out this one from 2 days ago, Bitcoin pumps, but on-chain woes remain. In it, I basically talk about the fact that a lot of off-chain stuff, off-chain data for Bitcoin have been looking very nice, actually quite hopeful for the past maybe 2 weeks or so, but especially like to start the week, it looked very solid. However, what has been an issue and what remains an issue to this day, I mean, at the time of the recording, have been Bitcoin's on-chain metrics. So there are still certain levels of inertia in Bitcoin's network activity that I am a bit frustrated about and a bit concerned about in terms of Bitcoin's ability to continue just rallying to maybe, I don't know, 55K by the end of the year. So I'm going to first go over some good things that I'm seeing on in Bitcoin side, and some of the things that I think have contributed to this rally over the last couple of days, maybe 24 to 48 hours. But keep in mind, we'll be going over some not necessarily great indicators for Bitcoin in the short term, right? Doesn't necessarily mean that Bitcoin can recover. Some of these are going to be sort of lagging indicators. So if the price continues to go up, I'm assuming some of these on-chain indicators are going to recover and move back into an upward trajectory. For now, they're just not, right? But first things first, right? Let's talk about some of the more hopeful signs that we are seeing for Bitcoin and the market in general. So the first thing that I want to talk about are Bitcoin's social metrics, right? So in this insight 2 days ago that I published, I talk about the fact that there's quite a lot of bearishness to be found in our social data. So essentially, for people that are maybe new to the channel, oh, hey guys, we've got a bunch of people in chat already. Cool. No eggnog, just Blue Moon Belgian white. I mean, that's better than eggnog. So good for you, man. Anyway, here, 2 days ago, I was writing about the fact that in our social data, on our social metrics, we're seeing quite a lot of fear in terms of retail response to the current market action. So for people that are not really aware of how we calculate social data, what we do is we currently track about 1,500 different crypto-related social media channels. These include Telegram groups that are related to cryptocurrencies, Twitter accounts that are related to cryptocurrencies, crypto subreddits, and major sort of forums and discussion threads that we can find around tailored around BTC and crypto in general. So we take this data and then we create metrics on top of it. And one of my favorite metrics from this data set is the one that I'm showing here, which is called Bitcoin weighted social sentiment. It's a fancy way for average bias of the crypto community towards a coin, right? So what we do is we take all of the mentions of Bitcoin that our servers collect from these channels on a daily basis. We then push it through a machine learning algorithm, which labels these messages as either positive towards Bitcoin and negative towards Bitcoin, or kind of neutral, right? Ambivalent, whatever. And so the end result is this chart. So the higher this chart is, or the higher this orange bar is, the more bullish sentiment is towards Bitcoin, especially from a retail sector. And that's an important distinction to make. And then the lower this orange line goes, the more bearish it is. So generally over the last 2 weeks, really, we have seen a clear departure from this sort of hype around BTC. Even while Bitcoin was dropping in price, we saw a relatively bullish sort of proclivity towards the market and the market's chances of recovery. But as Bitcoin was continuing to struggle to push back above 50K, as it went longer and longer into this boring consolidation period, we've seen the market sentiment crash. Like, we've seen it move back to a 3-month low at the start of this week, which I thought was a fairly hopeful sign. So for people that don't know, we have done some back tests on our social data several times. We basically do it once every year just to see what seems to be the impact of social media mentions and social sentiment towards coins on their price action. And when we've analyzed sentiment in particular, this social sentiment towards coins, what we found is that extremely bullish sentiment, and this is, we did this not just for Bitcoin, but for, I think, like 3,000 cryptocurrencies that we have in our database, 2,300 or something, to be precise. What we found is that, like, extremely bullish or extremely high social sentiment is typically, or more often than not, a sign of an increased risk of a local correction or an extended consolidation period. In general, what that means is that when the market or when the retail sector is super bullish about the coin, that's a red flag, or at least a yellow flag for the short term. Like, we've seen this several times in this year, right? Even when during the May correction, the first leg of the May correction was marked by a massive spike in bullish sentiment. So when Bitcoin started to drop, everybody was talking about buying the dip. We thought, I mean, most of the market thought that we were going to recover very quickly. This was just a news-driven dump. It was a perfect opportunity for people to move back into the market. And it wasn't until we were basically not just completely out of hope, but it was like almost a month-long bearish period in Bitcoin social sentiment that we saw the price start to recover again. And then once again, back here in the early October, we have seen the same sort of dip into bearish atmosphere before we were eventually able to recover to new all-time highs. So this, I think, is a relatively positive signal or development for Bitcoin's price action. The fact that people are just scared, and not just scared, but are actively rooting against Bitcoin, it seems, at least on crypto social media. So let's see what that chart looks like today. So it's been a couple of days. Bitcoin has pumped a little bit. So has anything really changed? All right, so let's see this live. I've seen it a couple of hours ago, but maybe something's changed in the meantime. So we go to graphs.santiment.net/social, and I'm going to smooth it out to make it as noisy as possible. And I'm going to take a 12-hour interval. And so we're going to look at the last chart here, which is the one that I screenshotted. And what do you know? We've actually, oh, one sec. We've actually got another bearish dip. So currently, the market seems to be, first of all, we had a little bit of a recovery, but overall, the last 12 to 24 hours, we have seen another sort of dip into a negative average bias. So overall, I think as long as we stay in this sort of, I don't know, air of FUD and the general sort of absence of market euphoria, I think from a social perspective, we're golden, right? The problem that I have with Bitcoin is mostly on the on-chain side of things, so we'll talk about that in a moment. But in terms of social, this, for one, is for me a hopeful sign, potentially hopeful sign. But I would keep an eye on this chart because it can change on a whim, right? It can change very quickly, like you've seen here. So if we see another pump, like maybe to 53, 55K, this can very quickly turn into a massively bullish indicator, or sort of we can see a massively bullish spike, and that would be a potentially yellow flag. So that's one thing in terms of Bitcoin social data that I find hopeful, right? The second thing that I find potentially optimistic for Bitcoin is the amount of buy the dip mentions. So I have this theory, and if you read my weekly reports, you probably know it as well. So I have this theory that mentions of buy the dip seem to coincide with, or sort of when we see large spikes in mentions of buy the dip, that usually to me points to the fact that the correction is not over yet. So what I mean by that is that several times throughout the course of last year, we have seen a spike in buy the dip mentions. So what I'm showing you here is the amount of mentions of buy the dip or buy the dips on crypto social media over the last year, plotted against the price of Bitcoin, which is in green, right? So we have seen a bunch of buy the dip mentions back in April when Bitcoin first started to correct from an all-time high. The first sort of spike in buy the dip mentions was early. It was way too early, and we had another leg down before we started to bounce back. There were massive buy the dip mentions during the May correction, and it wasn't until we completely sort of nullified that sort of market euphoria that we were able to recover. And then back in September, after the crash, we had a nice little spike in buy the dip mentions. We had another one right here. So this one was early. This one was early. It wasn't until the end of September that we were able to recover. And then the last point of data that I find relevant for our current situation was December 4th. So we had a massive drop in Bitcoin's price action immediately. On cue, we've got social media going crazy about the potential of buying Bitcoin at a dip. At a discount, talking about general market-wide recovery very soon, whatnot. And obviously, we went into like a 3-week-long consolidation period. So what I also find hopeful for Bitcoin's price action is that the amount of these sort of buy the dip mentions, which to me is basically a proxy for how degenerate are we currently, in what sort of stage of degeneracy the crypto market is right now. So lately, in the last maybe week or so, we have completely sort of removed these markers of market euphoria. Basically, we have gone from an extremely excited average sentiment towards BTC to, on the whole, quite an undecided / fearful retail sector. And this is where, generally speaking, I think we might be in a better position for a sustained price recovery. Moving into Bitcoin or any coin while the crowd is already hyper aware of its rally, and while the crowd is hyping it beyond belief, is generally doesn't seem to be a profitable strategy. Obviously, there's no silver bullet in on-chain and social analysis, but on the whole, personally, I like to see signs of clear sort of market fear and blood on the streets rather than seeing people be overly excited about the market. So currently, I think there's more. We're definitely leaning more towards fear than greed on the fear and greed index is what I'm trying to get at. And this is, again, this is where we are at the moment. If Bitcoin continues to rally over the weekend, I would not be surprised that we see some of these social charts start to flip back to a more bullish scenario or sort of a more bullish proclivity among retail traders. When that happens, might be time to reconsider your exposure in BTC and generally sort of there might be an increased risk of a short-term correction. We're obviously talking about very short-term, market dynamics here. So that's one. That's an off-chain factor that I thought was fairly hopeful for BTC. Another off-chain factor that I think is still relatively decent for BTC are its funding rates. So funding rates are fees paid by one side of the perpetual contract to the other. Essentially, what we are looking for when we're looking at funding rates is we're trying to analyze whether the market is net long or net short. So when the funding rates are high, like here, it means that on average, Bitcoin longs are paying Bitcoin shorts for their open position. So the market is net long on average, at least on Binance here. And when they are low, like here, these funding rates, it means that Bitcoin shorts are paying Bitcoin longs for their open position. So the market is net short on average. So I look at this indicator very similarly, and I analyze it very similarly to how I analyze Bitcoin related sentiment, like social sentiment. I basically look at it as two sides of the same coin. Funding rates are sort of a derivative proxy to how the market is feeling right now, right? So the higher the funding rates are, the more bullish or the more long the market is at the moment. And so as a result, the more potentially overvalued we currently are, and there's more incentive to flush out these over-leveraged longs. And then the lower the funding rates are, like they were here back in June and July, the more undervalued potentially the market is. And in general, there's obviously quite a sense of uncertainty and fear about Bitcoin's future price performance. So as you can see, extremely high funding rates have coincided with local tops for BTC over the last year several times. So the last couple of weeks, we have seen like a few brief dips of Bitcoin's funding rates into negative territories. And this is for the first time basically since early October. So this is all very sort of, it's a small sample size, but we have seen several sort of drops of Bitcoin's funding rates slightly into negative territory, which tells us that on some high volume exchanges, derivative traders are starting to lose hope in Bitcoin's chances of a recovery. So this is what we're seeing on Binance. This is what we're seeing on BitMEX. So a similar image overall, right? So we see these large drop-offs in funding rates around sort of periods of prolonged consolidation, similar to what we're seeing right now. And then we see spikes in funding rates when the market is becoming exuberantly confident about Bitcoin's chances. So overall, I find the fact that generally Bitcoin-related funding rates have been moving into a downward direction over the last couple of weeks. I also find that hopeful. Now, keep in mind, we're definitely not like, at historically low levels of Bitcoin's funding rates. We've just sort of scratched the surface. So we've gone from maybe 0.001% on most exchanges to negative 0.001 or 0.002%. So it's just a very small divergence, but a divergence nonetheless. So overall, I think Huobi is similar. I think FTX might be a similar. So there are some exchanges that are starting to show this sort of a negative bias towards BTC. So I would obviously like this to be even more pronounced, similar to what we've seen in social sentiment for BTC. But you can't have everything in life. Generally speaking, I think off-chain signals for Bitcoin, at least the ones that I look for on a daily basis, are decent, right? And they continue to be decent even with this pump above 50K. So my advice to you would be, if you're sort of looking for potential yellow flags for this Bitcoin rally in Bitcoin's off-chain signals, I would say, first of all, keep an eye on its funding rates. So if we see sort of these types of upticks, spikes in funding rates, that means that we're moving very quickly into a net long position. And also, if we see these types of massive anomalies, positive anomalies in Bitcoin social sentiment, that means that the crowd is becoming more and more excited about Bitcoin sort of holiday chances or whatever. And if that happens, I would be a little bit more concerned than I am right now. So in terms of off-chain signals, I think we're still looking fine. And this is what I wrote in the weekly report as well. If you want to make sure I did, go check it out. A few days ago, it says Bitcoin pumps, but on-chain woes remain. All right, so let me see if I missed anything in chat before I continue. Many people think we have to fill the wick at 42K. What do you think about this? And it's nice that people are moving from ETH to Matic. Okay, well, we're going to be talking about Ethereum a little bit later, Ken. So stick around for that. As far as having to fill the wick at 42K, I've seen some TA analysts to talk about potentially 42K, sort of this level as well. Yeah, I'm honestly, first of all, I'm not a technical analyst. So generally, I like to look at sort of on-chain trends and on-chain dynamics more than price and volume related data. Generally speaking, I don't think that's necessary, at least from the technical analysis friends that I have. I haven't heard sort of this confidence in their voices that we do need to have a massive correction back to 42K in order to see another leg up. So yeah, generally I think from a fundamental perspective, I don't think there's a need for it. If we do drop to 42K, I think a lot of on-chain factors that are currently looking very bleak are going to be looking much better. So from a sort of on-chain perspective, that might actually be a healthy thing for Bitcoin, but I don't think it's necessary. But to talk about on-chain data for a minute, let's start with some of the things that I find a bit more concerning about Bitcoin, right? And I used mean dollar invested age as a thumbnail for this video where I said, so it's this chart right here. And I said, and I think I used like a 3-month scale. Yeah, right here. And I said, are Bitcoin holders becoming more dormant? And I think this is what's happening. So for those of you that don't know what this chart is, mean dollar invested age is a metric that we have developed sort of in-house. at Santiment. I'm actually going to flash a definition of mean dollar invested age because I used it in this article as well. So that you can see for those of you that are visual learners. So what we do is for each unit of Bitcoin, we determine how long that unit of Bitcoin has stayed in its current respective address. And then we compute the average of all of those ages, right? The amount of time that each unit of BTC has stayed in their current address. And we adjust those averages by the price at which each unit was last transacted on the blockchain. So that still probably sounds a bit complicated. So put very simply, what mean dollar invested age tries to show is it tries to show whether we're in a redistribution cycle or we're in a sort of dormancy and accumulation cycle for BTC. So let me show you what I mean by that. All right, so 1 day interval and 1 day interval. There we go. So when we see large sort of inclines in mean dollar invested age, like we are seeing here, for instance, this means that at this point in time, the average age, right, of all those Bitcoin that are staying in their current addresses, the average age of those Bitcoin is growing. Those units of Bitcoin is growing. What I mean by that is that those units of Bitcoin are on average not moving between network addresses. So we're basically seeing a pivot to a network-wide inertia. There's less activity happening on the Bitcoin network on a daily basis. There's less value being transferred between network addresses, and overall we're moving to a hodling sort of dynamic, or the paradigm is mostly hodling in these sort of periods of the market, right? And then when we see these sort of drop-offs in mean dollar invested age, like we've seen here, and yes, we have seen here, this points to a period in time where the average age of those Bitcoin, units of Bitcoin, is becoming younger. So basically, Bitcoin is more actively being transacted on the network between addresses. It's being redistributed from one stakeholder to another in its network, right? So generally speaking, over the last several bull cycles, we have seen these large drop-offs in mean dollar invested age coincide with periods of price appreciation. So we've seen it in 2017, we've seen it in 2018, and we have seen it in 2021, right? So we've seen these sort of redistribution cycles of value coincide with, they usually start around the middle of the rally, and they have so far coincided with a relatively high uptick in Bitcoin's price activity. We've actually seen it on a smaller scale here in November as well. Now, what I am concerned about is the fact that these sort of like periods of a dormancy, network-wide dormancy, have typically not coincided with a massive sort of price uptick for BTC on even on a yearly scale. So generally speaking, these large upticks in Bitcoin's mean dollar invested age point to a period in time where the network is not growing. There's less and less activity on a network level, and as a result, there's less fundamental justification for a strong rally because the network is not growing. Most people, and obviously, like you could make an argument that most people are going to use Bitcoin as a store of value anyway. But even with that argument, the network still needs to grow. We still need to see adoption and generally sort of a healthy speculative interest in BTC as an asset. So on the whole, I am not a fan of these sort of massive upticks in Bitcoin's mean dollar invested age. Now, this is, keep in mind, a very, very macro indicator, right? So we're not necessarily going to use this to determine where Bitcoin is going to be a week from now, like at New Year's Eve. It doesn't really help us that way. What it does tell us is, on average, what are the network-wide trends? And currently, we are seeing, especially when we zoom in, we are seeing the last, let me do maybe 7 days. No, let me do 1 day. There we go. We're seeing the last maybe, a month and a half, basically. We have seen Bitcoin's mean dollar invested age chart start to grow to the incline once again. So that tells us that on average, as Bitcoin's price has started to consolidate and move down, there has been less and less of a network level activity. And so I use a few more charts in my weekly reports to highlight this phenomenon, right? So the one chart that I like to use are daily active addresses. So let me take a yearly view and show you what Bitcoin's daily active addresses are looking like. So daily active addresses are shows the amount of unique addresses that are interacting with Bitcoin on a daily level. So basically, how many addresses are sending or receiving BTC daily, right? So it's a fairly simple metric, but I think it's a very powerful metric because it's sort of used as a proxy for token-related demand. Are we seeing network effects in place? Or are we seeing generally the amount of interest in Bitcoin on-chain start to dissipate? So as a rule of thumb, the sustained price rallies have often come not just for Bitcoin, but for cryptocurrencies in general. These sort of sustained price rallies often go hand in hand with sort of a rise, a sustained growth in network level activity. So once we dropped here in May, once Bitcoin's price started to crash, we've seen a massive sort of 30% drop in Bitcoin's daily network level activity. So a massive drop off in the amount of value being transferred on the Bitcoin blockchain. And as we started to recover in on-chain activity, we have seen Bitcoin's price action also move into the upward direction. However, in the last maybe, I want to say 3 weeks or so, we have seen Bitcoin struggle to maintain the same upward momentum. First of all, we have seen sort of a relatively strong upward direction for Bitcoin's network activity between sort of July and November. Since Bitcoin's price level volatility started to move to a downward path, we've seen its network level activity move the same way. So overall, if I take the last, maybe couple of weeks here, from here to now, we see about a 12% drop in Bitcoin's daily active addresses. Actually, here, when I wrote my weekly report, I said since December 2nd, the amount of daily Bitcoin addresses has dropped by 15%. Right? So since the start of the month, we're seeing a 15% reduction in the amount of addresses using Bitcoin on a daily basis. And it's not just daily active addresses. If you look at daily circulation, which basically just tells you how many units of Bitcoin are being transacted daily on the Bitcoin blockchain, we're also seeing sort of a definitely not a continuation of this trend. This was a pretty hopeful sign for Bitcoin's price action, the fact that its network level activity was also growing. But in the last month, Bitcoin has not been able to sustain the same amount of network activity. And then, I mean, somewhat makes sense, right? Because BTC, in terms of its price action, it's not looking too hot. People are more reluctant to use it on a daily basis. A lot of holders are moving to sort of dormancy and staying on the sidelines until they figure out where the market might be going next. What is the problem with that? What the problem with that is that from a fundamental perspective, we're just not seeing a whole lot of reason for BTC to have a sustainable rally if its network level activity is declining. So basically what that would mean, if Bitcoin's price or market capitalization continues to grow while its network level activity is dropping, it means that we are sort of in an overvalued territory where we're not really seeing any reason for Bitcoin's fundamental reason, right? Network level reason for Bitcoin's price action to continue pushing upward while the amount of interest and demand in the coin on a daily level is dropping. So ideally, what we would see in the next week or two is we would see a recovery in Bitcoin's network level metrics. So we would see an uptick in daily active addresses, in token circulation, and we would see a decline in mean dollar invested age, which would tell us that once again, the average age of these units of Bitcoin is declining, meaning they're becoming younger. They're more actively being traded between addresses, right? For now, unfortunately, we're not seeing that. So take that for what you want. One other thing that I want to show for Bitcoin in particular is MVRV, because I think it's super interesting where we've been for the last couple of weeks in terms of Bitcoin's MVRV ratio. So I'm going to actually take 3 years of data to paint this picture. All right, and then I'm going to start taking audience questions, guys. So actually, before I get into this, might be a good idea to already tell you, if you have specific coins that you want me to look into a little bit, maybe, you know, spend 10 minutes looking at its on-chain metrics, its social metrics, let me know in chat right now. And so once you tell me in chat which coins you would like me to analyze, Max, which is handling the stream, is going to make a poll based on your requests, and then you guys can vote on the coin that you think should that we should analyze together. So overall, bonus points if the coin that you want me to analyze lives on the Ethereum blockchain. The reason why I'm saying this, and I also always say it, is the fact that we currently have on-chain data for Bitcoin, Ethereum, XRP, and Litecoin. So those 4 blockchains, right? If you want me to analyze a coin from an on-chain perspective, make sure that the coin that you want me to analyze lives on one of these 4 blockchains. If not, like if you're interested in, I don't know, Cardano, Solana, Near, which is pumping right now, we still have social data for those coins. We have development activity data. We have derivatives data for those coins. So we can still look at them from a variety of interesting perspectives, but we can't do on-chain analysis on them. So just keep that in mind, all right? Cool. Okay, MVRV. So for people that aren't familiar with this metric, what MVRV does is it shows the average profit or the average loss of a group of addresses, right? So the 30-day MVRV ratio for Bitcoin shows the average profit or loss of all addresses that have acquired Bitcoin in the previous 30 days, right? So currently we're at minus 0.4%. So basically that means that at this point in time, the average loss of all addresses that have acquired Bitcoin in the last 30 days is minus 0.4%. So they're basically just below break even on their initial investment, right? So for instance, here we were at minus 14%. So the average loss of all addresses that have acquired Bitcoin in the previous 30 days since December 4th was minus 14%. So how do people use this metric? So the on-chain analysts look for previous highs and previous lows in Bitcoin's MVRV ratio. So the higher the MVRV ratio goes, the more unclaimed or unrealized profits there are. And as a result, the more risky it can be to enter into a trade, because you're essentially entering into a trade against a lot of people that are sitting on a lot of profits that might be looking to dump on somebody, reduce their exposure, and generally de-risk, right? And so on the other side of that aisle, the lower that we get in terms of Bitcoin's MVRV ratio, the more opportune time it can be to accumulate according to some on-chain analysts. Obviously, first of all, I didn't even mention it at the start of the call. None of this is financial advice. We're just talking about metrics that we have on our website. This should all be only considered for informational purposes, for entertainment purposes. I don't know. It depends how entertaining you find me, but informational purposes, sure. So keep that in mind. There's no silver bullets in on-chain analysis or fundamental analysis in general. So everything needs to be put in proper context, right? No metric works 100% of the time. So what we're seeing in terms of Bitcoin's 30-day MVRV ratio is that last couple of weeks, basically since Bitcoin dropped, we've seen a massive drop in its 30-day MVRV ratio. So we've seen it move back to these sort of historically low levels. Obviously, there are a few outliers. First of all, we've got this Black Thursday crash, which was a massive outlier, and we have this May correction, which was another Black Swan event. But overall, even those events don't really last for more than a couple of days, and we start to recover in terms of Bitcoin's 30-day MVRV. So if I take a chart here, actually, I'll take this one. Can I take this one? There we go. If I take a line, this is a support line or a support level that I quite like for Bitcoin's 30-day MVRV ratio. So it's around minus 14%, right? Minus 14, minus 15%. This is historically has been a point in time where it seems like we are reached these sort of undervalued levels for BTC, where there's a proclivity for the price to recover in the short term, for the MVRV ratio to normalize back to sort of positive values. So Bitcoin's MVRV, 30-day MVRV ratio has actually spent quite a long time in this range, almost 3 weeks, which is not usually what it does, right? Even when we drop to these minus 15 percent levels, we don't really spend much time on that. Like the only other time that we've seen this sort of massive and prolonged drop in this area was during the May correction, which was one of the biggest correction in Bitcoin's history. So the fact that it's spent this sort of prolonged period of time in this minus 15% range was also another sign that on the whole we might be looking for there might be just a chance or an increased likelihood of a short-term price recovery. So as Bitcoin started to recover the last couple of days, its MVRV ratio has also moved up, right? Because the MVRV ratio is intrinsically connected to a coin's price action. So as the price rises, now we're going to see MVRV ratio grow. As the price declines, we're going to see the MVRV ratio decline as well. So currently we're at about a 0% mark, which is actually not that bad, right? Historically speaking, it's not that bad. We still have about 15% to go before we enter what I generally consider a proverbial danger zone for Bitcoin's MVRV ratio. So this level right here, around plus 15%. Let me draw a line here. This level right here is where I would be very concerned about Bitcoin's like chances of continuing to pump, right? Or move into price discovery or whatever. So we've still got some ways to go before we hit these sort of local maximas for Bitcoin's MVRV ratio. We're currently at a break-even point, but there's more room to be had on the upside, assuming strong fundamentals. Now, as I've talked about in the last 15 minutes or so, not all of Bitcoin's fundamentals are strong, but assuming relatively strong fundamentals, we're still got ways to pump, right? This is in terms of Bitcoin's short-term MVRV. In terms of its long-term MVRV, the situation is somewhat similar, right? So Bitcoin's long-term MVRV, the 365-day MVRV ratio, has actually dipped into the territory for the first time since July with this correction. And then, now we're at about plus 5%, but generally speaking, we're still ways away from these sort of bull cycle highs in terms of the MVRV ratio. So the long-term MVRV ratio. So we can go up to like about plus 100% before we mirror the levels that we were at in July of 2019 and February of 2021. So there's still more room to the upside. Obviously, I don't necessarily think that we're going to reach the same levels. That this metric, the long-term MVRV ratio, has a tendency to iron out over time or to flatten out over time. But as a barometer, I think this is generally a decent level to look at. Still, I think even if we assume that 30% is high enough for us to be concerned, because it is. Okay, thanks, Max. Pull this up, guys. Because this is also another resistance level, an interim resistance level for Bitcoin's 365-day ratio. Even if we assume that this is the sort of the death zone, we're still ways below it, right? So in terms of, we've been undervalued for a while is what I'm trying to say in terms of Bitcoin's MVRV ratio alone, not in terms of all of its metrics, but from just a profit to loss ratio perspective, we've been undervalued for a while. So Bitcoin is starting to recover from this perspective. It's still not up to where we could consider it massively overvalued. Now, keep in mind, all that being said, we've still got a long ways to go we've still got plenty of room to the downside to drop before we could consider it undervalued anymore, right? So with this latest recovery, Bitcoin is back to, the MVRVs are back to a positive range, a slightly positive range, but a positive range nonetheless. So I think currently this is like a mediocre sign. I think it's a relatively positive sign for Bitcoin's short-term price action. But if we continue to grow upward, we're quickly going to approach these dangerous levels. And this is why whoever asked me for whether I think 42K is going to be a level that we need to fill, if we drop down to 42K, I think one of the metrics that are going to benefit from it massively is exactly this MVRV ratio. So if you look, especially if you look at the 30-day MVRV ratio, so we're currently at 51K, right? And at 51K, Bitcoin's MVRV ratio is at minus 0.4%. Right? So if we drop back, assume or imagine we drop back to 42K, which is basically like here, right? So we are going to probably let me zoom in so you can see what I'm talking about. So if we drop back to 42K, we're probably also dropping back to like probably like minus 12 or minus 15% in Bitcoin's MVRV ratio. So we're very quickly going to be back into that bounce back or opportunity zone according to Bitcoin's MVRV ratio. Obviously, it's going to mean a lot of people are in a lot of pain. They're going to be losing money. But yeah, typically speaking, the lower the MVRV ratio is, the better for the coin. So yeah. All right, cool. I think that's as far as, right. Let me just also very briefly show you what the whales are doing for Bitcoin, because I know a lot of people are interested in whale activity. So here I already have a chart showing the activity of all addresses holding between 100 and 10,000 Bitcoin, right? So on average, not on average, so on the whole, these are the combined holdings of all addresses that own between 100 and 10,000 BTC. So as you can see, the last couple of weeks have been a seesaw for these large addresses. We are not seeing any clear signs of accumulation, nor really sort of redistribution. So we're seeing a sort of a undecided whale ecosystem, right? So we're not seeing whales move strongly back into Bitcoin or continue to accumulate, nor are we seeing their holdings decline. We're not seeing them offloading their bags either. They're currently quite uncertain, which is not ideally where I would like us to be, right? So for instance, if we look at the 2020 to 2021 rally, we can see a pretty clear uptick in whale balances. We can also see that here after the first sort of crash here in 2021, in September of 2021, we also see a pretty confident increase in whale holdings. For the time being, we're just not seeing it. For the time being, Bitcoin whales are remaining relatively quiet and are showing no clear signs of strength or confidence in Bitcoin's short-term price potential. So you should take that for what you will. It doesn't necessarily mean that we can't recover or continue to rally from these levels, but ideally, we would also see large addresses move back into BTC a little bit stronger than we're seeing it right now. Okay, so Max, if the poll is up, can you tell me, do we have winners in terms of which coins people would like us to see?
Yes, we have one that is in first place with 3 votes. That is Radix, EXRD.
A few sort of general on-chain, I'm going to cover a few on-chain metrics for Radix, then we're going to look into a few social metrics for Radix. We're also going to look into development activity, and then if we have another coin, if we have time for another coin, we're going to look into Ethereum a little bit, and then probably end the stream until next week. So, all right. Let's start with the active addresses for EXRD. So generally speaking, you guys have heard me talk about why I like active addresses, right? It's a very simple metric, but it's similar to in effect to, like, I don't know, total value locked, right? So it's sort of got the same component or the same bias. So generally speaking, the more activity on the network there is, the more reason or fundamental justification we have to see a prolonged rally. For Radix, we have seen its on-chain activity sort of peak around, well, okay, basically around 1,200 addresses, which would actually, if this was a normal level of active addresses for Radix, this would be massive. But it's a peak between 1,200 and maybe 1,000 daily active addresses at its best over the last year, right? Since this obviously incredible spike in its price activity, daily active addresses have declined pretty significantly. And actually, let me zoom in here. Yeah, so this is actually, oh, my headphone is down. This is what I'm talking about when I say that sustained price rallies sustain the network level activity. So what we're seeing here is we're seeing from here to here, we're seeing a pretty significant but generally sustainable uptick in daily active addresses. At one point in time, however, network level activity starts to decline. However, its price action still moves in the upward direction. So this we call sort of a price DAA, which is daily active addresses, a price DAA divergence. And in this case, it would be a bearish divergence where the price keeps growing, but its network level activity starts to decline. We're seeing less and less interest on a daily level in Radix, less and less both speculative speculative interest in actual utility for this coin. However, its price action and market capitalization is continuing to increase. So on the whole, these sort of, yeah, go ahead.
You can also add new network growth.
Sure.
Should be seen. Yeah, would be even more interesting. Well, not more interesting, just a different angle. How much is new blood is coming? You see.
Yeah.
And so is even more interesting. The newcomers were trying to buy the dip. You see, after it was dropping, but of course they were a little bit long.
Yep, right here. So this is a pretty significant spike in network growth after the price has already started to move down. So it seems like a lot of people tried to buy the dip, but not necessarily super successful. But this particular spike is fairly telling, right? So this is where we peaked in terms of network level activity. The next peak in price relative to its network activity is clearly smaller, right? So price keeps pumping. The amount of interest in the network, even though I assume this is an all-time high for Radix, right? Even though Radix broke a new all-time high, we saw a lower level of interest in the coin. So that kind of tells you where we are in terms of the amount of speculative and interest otherwise in this token, right? So at the moment, Radix's network level activity has plateaued. It's plateaued around 146 daily active addresses. So yeah, not really seeing any signs of growth, which, I mean, Radix isn't alone in this. Most ERC20 coins are seeing relatively low activity at this point in time. Like, there's a few exceptions. Maybe Matic would be an exception because Matic has been pumping like crazy. So yeah, you would see a sort of an uptick in Matic's network level activity. So about 9,000 addresses, but that's a clear outlier, right? So most ERC20 coins actually currently look like this: relatively low level of activity, no signs of increased interest in the coin. So what I would like to see for Radix moving forward is I would like to see some amount of
panic.
Growth. Yeah.
Panic.
Also,
move out of a coin. Yeah.
Yeah. So generally, we're not really seeing a whole lot of new blood moving into the coin. So yeah, might be a little bit of difficult for Radix to pump without that type of investment, right? Let's look at its sell side pressure. Let's look at let's look at exchange related metrics for Radix to see if people are moving into a coin or out of the coin at this point in time. So currently I'm looking at the exchange inflow for EXRD. So this is the amount of Radix that is moving to known exchange wallets over time. So there seem to be two very clear outliers here. So I'm actually going to zoom out of them because I'm not sure exactly what they are. There were probably some massive inflows or maybe arbitrage opportunities. So I don't want to look at them right now. I just want to see overall whether the amount of Radix moving to exchanges is growing or declining. And also let's look at the amount of active deposits. So active deposits are the amount of addresses that are being used to funnel EXRD to known exchange wallets. And sometimes we see these active deposits move in the spike around local price tops, but also around local bottoms. So we can see a pretty clear uptick in active deposits for EXRD here around this local top, but also we can see a pretty a cluster of active deposit spikes as its price started to increase, suggesting that there's quite a lot of sell-offs or profit taking for EXRD, which in the short term might sort of be added sell-side pressure that isn't necessarily going to be easily absorbed by its bulls. So currently, I think both of these metrics are quite low. So Max, since you're on the call, by the way, for you guys that are, first of all, I hope that you're here, Max. On the stream, let me know if you're not. But Max is the founder of Santiment, and Max, I know you like to look at these types of metrics to sort of evaluate the level of panic about the coin. So what would you say in terms of both exchange inflow and active deposits for EXRD are quite low right now? What does that tell you?
Need to wait more. If you want to buy, yeah, need to wait, need to see. Or it's not to exclude the price can grow because some part of the market is growing. If we see that growing price and increase in active deposit or edge consume, it means people trying to utilize on rally and they want to move somewhere else. And then it's a good sign. So we need to see something negative from sentiment of participants. Yeah, something negative. It's always, I always like to buy into some worries or dissatisfactions. It's the best conditions. The moment you don't see any. So I would, if I would like to buy, I would not. There are no reasons here on the chart to buy anything. If you stay in it, well, you can. There are nothing super bad, and I know fundamentals are kind of interesting. It's quite an interesting coin. But to increase my portfolio, I would not go into it. So there were some other things I think interesting, but we're not covering them.
Right. So maybe something like this, right, is what you would like to see.
Yes, exactly. Something like this.
But there's quite a lot of new sell-side pressure, which would tell us that we might be seeing weak hands capitulating, right? And as a result, we might, this is a clear marker of pain and panic on the streets. And as a result, if the coin is generally fundamentally sound, we might see this mark a local bottom like it did here. So yeah, currently we're just like Max said, basically we're not seeing a whole lot of panic on EXRD's exchange level charts, which while the coin is sort of consolidating, you would like to see people start giving up on it a little bit, like we've seen for Bitcoin actually in the last.
And then also we can see if there are some whales who are unknown, more wealthy, if they're accumulating, because you know how it works typically, or not all the time, but quite often. There are some close partners to projects, and they know a little bit in advance that something's going to happen. So if you see accumulation of wealthy addresses, has to be, I don't know what is the market cap of Radix, but I will assume anything north from 100,000 wallets. If you see that they're accumulating, you try to follow them.
Yeah, it's so 200 million.
How many millions?
200 million is the market cap. So let's.
So it should be wallets which are holding more than 400,000.
Yeah, let's see.
Prices.
Versus, we've got 450 wallets holding between 100 and a million, 100,000 and a million, and we've got 98 wallets holding between a million and 10 million. So okay, let's look at those two groups. First of all, let's look at them separately, right?
And also, you can include 10,000 to 100,000 is also okay.
Sure. Okay, let's do these two groups combined then. 10,000 to 100,000 and 100,000 to a million. So last year.
No accumulation.
Yeah, no.
So you see how they spiked? They knew when to buy, and well at this time, but they also were dissatisfied before.
And then 1 million to 10 million, kind of a similar story. So at the moment, these large addresses, we're not seeing any clear signs of accumulation. Although these guys seem to be a bit smarter, right? 1 million and above. Especially here around the low, while it started to pump, we've already seen them start to
probably not just smarter, but once they move, they push the whole market down.
Right.
More like this.
Yeah.
What's smart in the sense?
So here, I would need to go back and figure out. I think there are also two. Like, is this when we saw these spikes in exchange inflow? Let me see. So these are clearly some massive events in the network's life, but I would need to go through specific transactions to figure out what exactly they mean. Yeah, so see this big spike in exchange inflow, it's obviously related to this. This one, I'm not sure exactly. Like, you can figure out what these drops are by looking at our top transactions. So what you can do is you can go, for those that want to analyze this further, we don't really have time on it here, but you go to top transactions. You add the top transactions table to the charts. And so you say, okay, I want to analyze all of the transactions that happened on September 15th here, right? So I say, okay, show me all of the top transactions between September 14th and September 15th and sort them by value. And so this is the highest. So basically you can go through the biggest transactions and figure out what are the transactions that are responsible for these massive drops and spikes. So, you know, you could go to Etherscan and figure out, okay, this is 259 million EXRD being moved. Where is it being moved to and from? Look into these addresses, figure out who they most likely belong to, so that you can figure out what is the context of these network level moves, right? But yeah, currently just that type of analysis is quite long, so we can't really do it live on the stream. Anyway, exchange inflow. So I was just showing for Bitcoin, when it comes to what Max was talking about, you sometimes like to see people panicking out of a coin. So if you look at Bitcoin's exchange inflow right before this this uptick, we had a little bit of a spike right here before we started to pump. A little bit of panic, more than enough sometimes to push us into the right direction, right? So, okay. Finally, let's look at social activity for Radix. I wonder how much mention we have for Radix in our social channel. Yeah, I mean, okay, let me. Yeah, this is the amount of social volume for Radix over time. So seems like clearly there have been fairly significant spikes in EXRD mentions as the price started to peak. So this is something that we've done backtests on, right? And we consider a potential alpha that a lot of people aren't really aware of, is the fact that when social volume spikes while a price of a coin pumps, so while a coin is in a price appreciation cycle, and we see massive uptick in social interest and social engagement around that coin, that usually points to the crowd becoming hyper aware of the rally and becoming increasingly confident, even irrationally confident, about the chances of that coin to pump to the moon or whatever, right? So when you see these types of spikes in social volume, what you're really seeing is you're not really seeing people talk about Radix's fundamentals. You're seeing them talk about Radix to the moon, Radix pump, rocket emojis, fire emojis, whatever, right? It's very sort of a tribal mentality that happens around these massive spikes in social volume. So generally speaking, these social volume peaks point to a potentially overvalued environment where we might be looking at peak market euphoria, and as a result, there's an increased risk that we are going to see a short-term correction. And this seems to be what happened with Radix. So the good news for EXRD is that currently we're seeing relatively low levels of activity, and this is where I like us to be. So generally speaking, social volume, I think, is a better top indicator than a bottom indicator. Like, it's much better or easier to use when you're looking at a potential exit opportunity. All you need to do is figure out whether you're discomfortable with these levels of social interest in the coin, which I would maybe be. On the other side of the aisle, all I want to know from a social perspective is whether there's how much are people talking about it? And it seems that right now they're talking about it as much as they usually would be. So there's no like increased limelight on Radix as a project, which is good. Like, assuming that other fundamentals are strong, low level of interest and low level of excitement about the coin means potentially undervalued market and potentially undervalued project, right? Okay, so we're at a 1 hour mark. Max, do we have another coin that people have wanted us to look into? Because we have maybe about 5 minutes more that I can look into a few coins, or one coin.
Oh yes, in that case, I think we have EFI waiting. Efinity.
I know very little about
yes,
Efinity.
That one.
Okay, so let's look at what its charts are telling us. Okay, so let's look at deposits. Yep. Yeah, so I mean, you can kind of see similar things, right? Active addresses keep bumping. At one point, we see a decline in network level activity. The price is no longer able to sustainably move upward, right? So if you want a relatively consistent price performance in a coin, what you want to see in terms of its on-chain activity is something that you've seen for Bitcoin at the start of the year, right? So let me show you. This, right? Not a lot of coins can do this. Not a lot of coins can have a year in consistent growth of daily active addresses, right? So yeah, if you're a small coin and you have this type of traction, That's amazing. That's awesome. And obviously, at one point, the price is going to follow suit. So for EFI, we do see sort of snippets of market activity, but that's probably just sort of a lot of people, short-term excited about its price prospects, and probably also a lot of people just selling, which is also why I look at active deposits. Yeah, so the amount of addresses depositing EFI to exchanges. And you kind of see around local tops here, and also starting to pick up here. So generally speaking, yeah, you will see active deposits spike around local tops sometimes, and sometimes around local bottoms. We see in terms of exchange inflow, also a pretty big spike around the all-time high, another spike here. I have no idea what this one is. Let's see. Exchange flow balance. It's a legitimate spike. So I sometimes like to confirm the exchange inflow chart with the exchange flow balance chart. So the difference between these two metrics is exchange inflow shows you only the amount of EFI, in this case, moving to exchange wallets. Exchange flow balance shows you the net flows of EFI to and from exchanges, right? So it seems like in terms of exchange flow balance, we're also seeing at this point in time a lot more EFI moving to exchanges than from exchanges. So this might be I don't know, it's either like an undiscovered exchange wallet that we have that was part of this transaction, or it's a legitimate uptick in sell side pressure. This would be a massive sell side pressure, though. How much? 14 million? Yeah, 14 million Efinity moving to exchanges in probably one single transaction here on December 18th. But the best way to figure out exactly what it is by looking at these individually. So what is it? December 18th. Let's try to do it very quickly. Show me all of the transactions between December 17th and December 19th. Seems like no, probably neither of these. I would expect to see a massive transaction, like something in terms of maybe like this one, 3 million, right? So what is this transaction? Yeah, probably this one. It's from this address to Gate.io, $3.8 million. So it's one of these, which is probably very much responsible for this uptick in exchange inflow. What is this address? We have it labeled as just a trader. Let's see how much Efinity it had before it dumped it. So let's look at last year of data, price of Efinity. Okay, so this address, whatever the hell this address is, has accumulated a lot of Efinity. So the address that I'm looking at right now is this address. This sent almost $4 million to Gate.io on December 18th, right? So what I've done is I've looked at this transaction. I've clicked on the sender address, and I've looked into the amount of Efinity it has held over time, right? So it seems like it's very interesting. So it's basically at the start of Efinity's life, it held no Efinity whatsoever. So it doesn't seem like it bought it at, I don't know if Efinity had seed rounds or whatever. It probably wasn't a VC or something. Seems like it started to accumulate slowly over October. And then as Efinity hit a new all-time high, dumped all of it. Immediately, the price crashed. So, yeah. And then here it started to accumulate again, but this time it seems like after this crash, it kind of got tired of holding these bags and started dumping them here. So this guy or this address clearly seems to have an impact on the market action, and I would actually keep an eye on it moving forward. So yeah, some whales seem to be maybe giving up on Efinity, at least in the short term. Not sure. Not exactly what you would want to see is whales showing a lack of confidence in the project, right? But this is the type of stuff that you can do with our data. We just don't have time to go into specifics on the call. All right. Let's look at active addresses once again. So currently, similar to Radix, right? About 189, 150 daily active addresses. It's not it's not negligible, but at the same time, it's not going to blow anyone's mind. So I think there's like 100 different coins that are in this range of like between 100 to 150 daily active addresses on Ethereum. Really, if you want to break through, if you want to get to that upper echelon of, interest in the coin, you need to have like 500 or more daily active addresses. It sounds very small in a grand scheme of things, right? So all you have to do is you have to make sure that there are 500 people moving this coin between addresses on a daily basis. But you would be surprised how many coins just aren't able to sustain that level of activity, right? Crypto is still very, very young. There's only maybe 20 coins that have more than 100,000 daily active addresses. Like there's a lot of like value accumulated at the top, and then a lot of very, very low used coins. And Efinity currently still fits in this portion of the market. Let's look at net profit loss. Yeah, okay. I like this chart. Yeah, so net profit loss is a metric that essentially what it does is it shows the total daily ROI of all network transactions. So the higher the net profit loss is here, this is obviously that one whale. These points to a period in time where on average